Well, let's focus on LIC Housing Finance then. Quarter 3 was rather weak showing with disbursements declining on a year-on-year basis and AUM growth as well has slowed down. Mr. Adhikari, the MD and CEO of LIC Housing Finance, joins us on the show. Hi, sir. Good morning. Thanks so much for joining in. Well, give us a brief idea in terms of disbursements on a quarterly basis. What should it look like, in the coming quarter and from year on? And also, could it guide us in terms of AUM growth? What do you end this year with? That's FY24 as well as FY25?
Looking forward, I think I'm very positive. The company will continue to do well. We have been doing well as far as the profits are concerned, much above what we have done in the last entire financial year to put together. As far as the AUM book is concerned, yes, the growth has been tad slow. But I think we need to realize that this has been a year of consolidation for LIC Housing Finance. At the beginning of the year, we went in for a major technology upgrade. We also went in for large-scale restructuring of the organization. So put together, it has been a year of consolidation. Quarter on quarter, we have seen growth in our business. Yes, the AUM growth stands at 6%. Q4 is going to be better, much better than Q3. But the consolidation will go on forward. Looking forward to FY25, I think we will start delivering in FY25.
All right, Mr. Adhikari,
steps we've taken, the technology upgrade, the restructuring, that will bear fruit in the quarters of FY25. And I see a guidance of at least a growth of 15%.
15% AUM growth, right? 15% AUM growth, Mr. Adhikari, for FY25?
Yeah, FY25.
Got that. And could you tell us, what is the current ticket size? What's going to drive this growth going ahead in terms of disbursements as well? Will it be volumes or do you see the ticket size as well going up?
Well, our current ticket size is around about 25 to 27 lakhs. That is the ticket size. Yes, I do agree slightly on the lower side as compared to my peers. Yes, we are definitely looking at increasing the ticket size, moving on to bigger markets. A major thrust this year has been on growing our distribution channel. We have been seeing some traction in that. Distribution channel has grown, so that should bear fruit. Yes, it's not going to be very huge. We're not going to jump from 25 lakhs to 50 lakhs or something like that. But definitely, there will be an improvement in the ticket size. And there will also be a growth on the loan book also. As I said, guidance of about 15% growth in the loan book in FY25 is what I'm looking at right now.
Mr. Adhikari, good morning. Prashant here. Could you talk to us a little bit about, what are the kind of spreads that we should kind of model in that you will make? They're at about 2% right now. They're high. They're higher than what you have done in the past. Is it sustainable? Should we expect this to go down going forward?
Going forward, I believe it will be slightly moderate. It will moderating, I think, and maintaining these spreads. We'll be doing well as far as spreads are concerned, 2% right now. But I don't expect a major change or a moderation in these spreads. Should of course, the aim and attempt will be to try and moderate it. But this is largely driven by retail. The spreads are largely driven by retail loans, which we've been selling. In the coming years, 85% of my book is on the retail side. Looking forward to diversifying this in the coming fiscal. So I think spreads, yes, should be more or less there. Don't expect a big downslide in the spreads.
So back down to what? I mean, 1.5% from current 2%? Is that something like that, in that vicinity?
Yeah, somewhere around that.
What is the current cost of funds, sir? And how do you see that moving from here on?
From here on?
Yes. So what is the current cost of funds? Say in the last quarter and the previous quarter, what was the cost of funds and how has it moved? Because that in turn will impact your NIMs, right?
Well, the cumulative borrowing cost is around about 7.70 at the end of the quarter. Yes, there will be pressure on the cost of funds, I believe. But I don't expect a big downslide in the previous quarter. There hasn't been too much of a sort of increase in the cost of funds. The NIMs were okay, restricted only. We went down by just 4 basis points. So I expect the cost of funds to hold at the current levels of 7.70%.
And that means NIMs will be stable around this 3% mark.
Yeah, the NIMs, 3%. We've done well, I believe, in NIMs as far as the NIMs are concerned. Just down by 4 basis points in the current quarter. Yes, there would be a pressure on NIMs, but I don't expect too much of a sort of worsening of the NIMs. At the most, 10 to 15 basis points at the most. Guidance of 2.8 plus is what I'm sure we'll be able to deliver.
Got it. Final question before we let you go then. Give us a sense in terms of how does asset quality and credit cost guidance as well from here on?
The asset quality has been improving. Yes, this was a major, I think, worry for all of us when we started the year. The quality was not good, especially on the project or the builder loan book. Yes, we have been working hard. We have taken steps, wherever possible. There have been negotiations going on. A lot of positives on the negotiations front. Then again, wherever possible, we have taken legal action, whatever is available to us, whatever legal recourse is available to us. So yeah, asset quality has improved, and going forward, I see a continuous improvement in the asset quality.
All right, Ms. Adhikari, we'll leave it at that. So 15% AUM growth for FY25, spreads around 1.5, NIMs around 2.8. That's broadly the picture coming through from you. Good luck, sir. Thank you for joining us here.
Thank you so much.